Hey everybody, Jamie here. Welcome back to another episode of Keeping It Real with Jamie at the executive offices of Crossroads Realty located here in Ocean County, Toms River to be precise. A lot of stuff happening. It's summertime. We got 4th of July week. The beach is popping. Everybody's down here. The weather's beautiful, and they're saying it's going to be nice, I guess, up until Thursday, I guess. I don't know. The Keeping It Real group. We're busy. We have a listing on 36 Buena Vista Drive in Toms River, which is Holiday City South. I have one out in Brick at Evergreen Woods. If you're interested in any of these, just give me a call at 732-558-3286. Enough of the shameless plugs. Today, I'm back for the third time. We have a few technical difficulties on this, but my guest today, well, we're going to talk about mortgages, and especially now with the rates and everything, where they are, where they're going. We're going to dive into first-time home buyers, cash versus mortgage. We're going to get into all of that with my good friend and guest, Nick Esposito from the Advisors Group in Toms River, New Jersey.
How you doing, Jamie? Not bad for our third time.
And listen, I'm going to take responsibility for all that because I'm the host of the show. We got Donna behind the controls, too. Say hi, Donna. All right, Nick, so a lot with this with the interest rates, everything going on with the lawsuit. I guess they're saying August 17th, but I don't see that happening.
Yeah,
my personal opinion.
I would tend to agree with you right
end
now.
Of the year.
Yeah, I would tend to agree with you right now.
Yeah, I just think there's too much still left on the table that they haven't.
A lot of unknowns, no doubt.
And I think in the beginning it's going to be a little bit of a zoo, free for all, race to the bottom.
100%.
That's what I'm thinking. But who am I?
Just the host of the show.
Yeah. Let's start with the interest rates.
Yeah.
I mean, I remember we had Nick comes to a lot of the Crossroads. Each office has meetings, and he'll come, and he came in the beginning of the year, I think it's April.
Yeah, probably.
And we were talking about interest rates, and you had thought that maybe they were going to drop them three times. I mean, they were saying.
Yeah, the Federal Reserve pretty much put it in place that they were going to have 3 rate cuts in 2024.
Well, it's July.
It's crazy, The federal anything, they never lie to us. It's so crazy that happens.
Yeah,
you know what I mean?
I'm not blown away.
No, yeah, but listen, obviously now they've kind of backpedaled their position to 1. So I truly do think, and I don't think it'll be in July. So the next meeting will be in July. I want to say it's the 3rd week of July. They'll have another Fed meeting, and I don't see it. Maybe I'm wrong, but I don't see them doing it then. I think the following meeting will be their first 25 basis point rate cut, which people think that means the rates are just going to drop like a rock. They'll start to come down, but they're definitely not just going to drop like a rock. It's just not. Yeah. It's not going to be the way it works. 100%. Well, that's
you want everybody happy. November.
100%. No matter what side of the election you're on,
yes.
I think that you want to see economy easing and becoming a little bit better. Crazy part about this economy, the Federal Reserve numbers, inflation is coming down, but spending really isn't coming down as tremendously as they want.
No.
So here's the thing. When everything costs more, people are making approximately the same. How are people affording it? Those 2 magic words, credit cards.
Of course.
So now for every dollar, every dollar you earn, I think people spend like $1.08. So as crazy as that is.
Wow, that is.
Because of the fact you could use credit cards. Now, 29.99%, but you could use them. So I think what we're going to see is when these rates come down, we're going to have a little bit of for me anyway, a little bit of a 2-headed prong attack. Some people are going to start to sell because they're going to feel more comfortable now that the big part is inventory has had such an issue for you guys because, let's say Jamie buys a house and your rate is 3.5%. You want to now upgrade. 5 years goes by. You could get $150,000 more than you paid for your house, $200,000 more. That's great, but now your rate's 7. You're gonna go up in house and then double the interest rate.
Right.
So I think that is a major factor as why inventory isn't the way where it should be. Yeah. So I think when rates do start to come down, you're going to get that confidence back where people don't mind being 5%.
Right.
from 3.5.
Well, where we are today.
So today we're upper 6s to low 7s, depending on credit score,
Yes.
which we'll talk about. Credit score is the number one driver of interest rate.
Yeah.
Obviously, the person who has the 780 is not going to have the same interest rate as the person who has a 640. It just there are risk levels there and done accordingly. So I think the other prong of that attack is the people who are staying in their home and rates come down. Their credit cards are going to be through the roof. They're going to have the equity, and what they're going to do is consolidate all their debt and then see what move they want to make. So I think both sides of our industry, our side and your guys' side, is definitely going to exponentially grow in the next 12 months. Yeah. So I think it's going to be great for you guys, great for us. That's what I think.
And I think the herd's going to be thinned out with all the changes.
Oh, 100%. That always happens.
A lot of agencies are going to say, listen, I've done it enough. I'm done.
And
this is like personal.
Yeah, and getting into that lawsuit, which we'll talk about later in the show, I mean, I think that's going to really downgrade the amount of agents that are in the industry. Some are just going to say, I don't want to do this.
Well, from what I hear talking to agents, a lot of them are saying, well, this is bull crap. I'm not doing this.
Yeah.
Well, yeah, you're going to have to do it.
Yeah, listen, the mortgage industry has gone through 4 or 5 major changes since I've been in 25 years.
Right.
I mean, I'm talking major changes where we would look at each other and say, how are we even going to, do this? And, we made it through. You guys are, we're all in the sales world. We have to always adapt. How many times have you heard that phrase? You have to adapt. And the good agents, just like the good mortgage people out there, adapt to the changes in the business.
Well, you have to.
So I think, if they have the proper teachers, you have your team, people who, want to reach out to you, you'll educate them properly, want to join your team. You guys are, I think, Crossroads especially, and you guys are just ahead of that curve.
Oh, this company's been ahead of it. As soon as it hit,
yeah,
the news started breaking, the lawsuit.
I was sitting with Chris. Yeah.
Chris was in here on Chris Stapiro, our CEO, the CEO of our company, and came to every office, and we sat and did a website. And actually, he's next on the list.
Yeah, he watched countless hours of this lawsuit and really did some studying up on it and talked to attorneys. And I think as a whole, you guys are one of the ones ahead of the curve.
Without a doubt, when the whole thing started, and I had a couple listings hitting the market, so at that point I was saying, "Hey, things are changing, but you really don't have to give out." I had one guy right away.
Yeah.
Well, screw that. I ain't giving it. Well, it didn't work out good in the beginning.
No.
And I was actually the first one in the company
to do it.
To do 0, and the only calls I got was to get yelled at.
But that's my point,
listen,
right?
That's coming.
100%.
Before this year's up, it's going to be.
And
I
think the main thing is options.
Yes.
It was never presented as an option.
Exactly.
So if people have options, they'll make an informed decision, and you guys will be able to, have some data to prove certain things.
It's going to be, and even looking even farther into it, our company was ahead of having classes on having that conversation with your buyer.
Oh yeah, 100%.
I mean, now most of your clients come from your personal, sphere of influence, and you got to have that talk with them now.
Oh yeah,
you know what I mean. A lot of but there are going to be options on there about not having. Don't show me houses
that don't have a.
But then it's going to bring out a lot more of the people saying, okay, well, I'll just go to the listing agent after you showed them the house and they liked it, but they're not giving anything.
But you know what? I feel like if they just go to the listing agent, also, they're really not represented by anybody.
Well, that's what the people. I educate my clients on.
Yeah.
That. Yeah. And even listen. I love getting dual agency.
No, of course.
But I'm fully disclosed to my buyer.
Yeah.
Yes, I'm going to negotiate the deal for you, but, I'm
you really technically work for the seller on that.
But, you're going to, and it does save money in the long run, the way I have it structured with my clients for them. So it usually works out.
No, yeah. I mean, listen.
I'll take a little bit of a lower rate.
Of course.
Both sides.
Of
That's
course.
my opinion of keeping it real.
Can't be greedy.
No, you can't be greedy.
Greed kills every business.
So, what do you think is going to? Where do you think the rate's going to end up being?
So,
in the future,
I have a short-term goal, long-term goal kind of look.
Both.
So, I think short-term goal now to the end of the year. I think we're going to see probably, anywhere from 30 basis points to a half a point lower in interest rate. Not by the Fed. I'm talking about in the actual rate. So, I think by the end of the year we have a shot of seeing low 6s. I mean. With the election, you really never know.
Right.
I wouldn't be surprised. It wouldn't if you told me, excuse me. By the time election happens, we're high 5s. I wouldn't be shocked because I've seen. I mean, if you think about it, go back you were in the industry, go back, 4 years, 3 years ago. I mean, we were 2.25. No one ever thought we were going to see that. Right. So my point is, nothing shocks me after 25 years in the industry, but I truly think end of the year, low sixes. And then I think 12 months out, you got possibly a shot at low fives, high fours. I mean, that's absolutely a possibility.
Wow, that would be nice.
Listen,
I think that would definitely loosen everything.
Listen,
up.
100%. And a healthy market is interest rates in the low to mid fours. That's where they should be. They shouldn't be 2.25. They shouldn't be 8. They got up to 8.5. I mean, so. Yeah. If you think about it now, if you're in the upper sixes from 8.5 already, we've seen a significant drop.
Yeah,
that's step one.
It's getting better, and the inventory's starting to rise a little bit. I can see, like every morning I go on.
You get the report,
and I can see what's available out there. Let's talk a little bit about first-time home buyers, because it's got to be scary for your kids out there.
Yeah.
Your first-time home buyers, and you're looking at these huge numbers. And there are perks for home buyers.
100%.
But on the other side, you also probably, if you're renting, you're paying more than you would with a mortgage anyway. So the smart ones are figuring this out. You save a few bucks.
100%.
And you can talk to Nick.
So here's the thing, man. Renting sometimes is a little bit cheaper, but you're talking when the average rent is $3,000, and you could buy a house possibly for $31,000, $32,000. You have the interest write-off now. You have the tax write-off. You're going to make way more money back. I'm not an accountant, but you're going to make way more money back than throwing $36,000 a year out. I mean,
crazy.
when
I write the leases and I'm looking at it, like, wow.
When we did Take Two, you said you had a lease in somewhere. It was like $3,400.
Yeah.
And it probably leased, right?
Yeah.
Yeah. I mean,
it's a nice house. Don't get me wrong.
But still, $3,400.
It's $3,400.
Well, what would it have been a year and a half ago? $2,500.
Yeah.
26. So if you think about it, where we are in the lease world, I mean, I get it. Landlords can get it, and the way of the world. If I told you could sell, mouse pads for $30, you're going to make mouse pads and sell them for $30, right? It doesn't matter. So I can't really fault the landlords getting the rent because you can get what the market will bear, right?
Exactly.
But first-time home buyers do have a lot of incentives right now, anywhere from low down payment, lower interest rates, to possible grants. You know what I mean? They're down payment assistance. We're the number one, grant lender in the state right now.
That would be Advisors.
Advisors Mortgage Group as a whole. Yeah. Advisors Mortgage Group, our headquarters are out of Ocean, New Jersey by Eatontown area. Yep. We are the number one lender. Now, the grants are good and bad in my opinion. I think they're good because they're there to help people who don't have down payment money. They are a little harder to get. Listen, the guidelines are a little more strict and stringent because if they gave them to everybody, they'd have no money left. Exactly. So I do educate people on that when they do call me, and it all depends on the house they're trying to buy. Grants usually take a couple weeks longer to possibly a month because we have to send it out, and after we're done with it, they do have to be looked at by either the county if they're going to do the county grant or the state.
And in this market, a lot of sellers are waiting that long.
There you go. And some do.
Offers.
There you go. Some do, some don't. And I don't know real estate law. I believe you guys have to disclose if they are getting a grant.
Yeah.
So again, I don't know. That's up to you would talk to them, but that's something that we have to be cognizant of. So it's all about the structuring, right? For first-time home buyers, but FHA.
Why not go to the I was just going to say the FHA. A lot of people get scared when they hear FHA. Not me. I think it's great.
I don't think you should get scared at all. I think here's the thing. I think the good agents now know that if the house is not in disrepair, a couple little things, peeling
you
paint.
Have your stuff together.
Yeah.
That's all.
And like I said, people could call and say, listen, what do you think of this house? And, my business partner was an appraiser for 35 years, Matt Patterson. So he can kind of take a look at the pictures and see if FHA, would have a problem with it. He has that level of experience. He had his own appraisal firm for probably 30 years. So it's nice to have that right in our office. So I think a lot of agents, you're going to see that's going to be one of the biggest changes, I think, in the next 12 months. Before COVID, FHA loans were almost half the market, about 40% of the market. After COVID, I feel like everyone snickers at them now. And I think it's a shame. Them and VA loans.
That's another one. The VA loans. Listen, when you're signing the papers, you're getting your money at the closing table. I don't care if it's cash.
Yeah.
As long as it's going to my bank.
The state of New Jersey is notorious. It is one of the hardest states where a seller can keep a deposit.
Yeah.
You know what I'm saying? So I understand you want to have
both sides of that coin.
And I'm not saying it doesn't happen. I'm not an attorney, so I can't give that type of advice. But I mean, usually what I see, a deposit is not kept. So I understand where people are saying, oh, I want to make sure people have skin in the game. But I feel like how quickly we forgot that FHA loans used to be such a big part of the market, that veterans are out there. They fought for the country.
You less money down.
Me personally, when I bought houses in the past, and I've owned a bunch, I'd rather have I'd rather put less down and invest the difference, because you're either putting the money down to sit in equity, or I can make the money work for me. I mean, I'm just saying that's me.
Upgrade your house.
Yeah. I mean, I'd rather put it in my investment accounts and have the money make me money.
Yep.
So again, that's me. But I think FHA loans, VA, all these lower down payment loans in the next 12 months, I think they're going to start. I've said that 12 months ago. Don't get me wrong. And I think everyone did. Everyone is, I think, still a little shocked that we're still here as a nation. But that's a conversation for another day. Yes. I think that we will be starting to see the light at the end of the tunnel.
What kind of rebates are out there?
So
for just
yeah. So for example, you have your county grants, which are anywhere from 10 to 15,000 towards assistance. 10,000, excuse me. Ocean County grants. We're part of all the counties that have them. Then you have your NJHMFA, which is the state grant, which is 15,000. And then they have one that's 20,000, but it's much harder to get. You have to show like you're the first person in your family ever buying a house. So it's like they have to go back to the lineage and see no one owned a house. It's a little hard. Like I usually say that's more of a $15,000, and you could use it towards down payment and or closing costs. You can't use it to anything else. You can't use it to like upgrade the house or any of that stuff. But there are stringent rules. Like I had a client call me the other day, first time home buyer. I want the grant. I said okay. I said let me take a peek and look. They have like $95,000 in the bank. They have more money in the bank after the down payment than. You can't have more than a certain amount of money. I forget the exact, but you can't have more than a certain amount of money left after closing. And they said, but I'm a first-time home buyer. I get it, but unfortunately, this is what I mean. Like
you're in a good position.
So the grant wasn't put in place for that, right? It's put in place for people to stimulate home ownership. Right. These people would have bought regardless. So there is a little bit of people get upset, but I mean they don't get mad at me because at the end of the day these aren't my guidelines.
Who can get mad at you? Then?
Yeah, and good point. I mean, it's very hard to get mad. I said the same thing to my wife. It's very hard to get mad at me. But those are really the rebates that are out there now. And then what we usually do is anytime someone purchases with us, when rates drop and we refinance, we lower fees as well for them to have a nice experience the second time around, which really does help.
Nice. Cash versus mortgage. Let's talk a little bit about that.
Yeah. So this year, in the last few years, cash has been the most plentiful I've seen.
And on high houses, like high-end houses, I've had, 3 or 4 that they sell their big houses in Staten Island.
Yeah.
And they're, coming down here and paying cash for waterfront homes down here.
So here's the thing. I'm 50-50 on this, right? Obviously, I do mortgages, so I'd love to do a mortgage. But if you're asking like the root of the question, I think cash is right for the right situation. If you have someone who's on fixed income and sells their big house, or someone who is kind of in that retirement age, I can't really argue with them buying their house in cash. Only thing I could argue is if they really have zero other write-offs and they need the write-off. I would say, listen, you have to talk to your accountant and financial advisor, but there's a way where they could work out where the money they were going to use the cash for, take out a mortgage and invest that difference. Because if you invest the difference and it makes you more than not having a mortgage payment, I mean, I'm a numbers guy. I've always been. So if you tell me I'm not going to have that, $1,500 principal and interest payment, but I put this money away and I'm making $2,500 a month on it, I just made $1,000. I'd rather have the payment and have if I'm on fixed income and have another $1,000 a month. So that pays my taxes and all that other good stuff. So I think people kind of don't see the forest through the trees and or don't have the right financial advice. So financial advisors are, to me, when you're dealing with that type of cash, are extremely helpful in these scenarios.
Wow, nice. All right, so there's a lot of different mortgage companies out there. There's a ton of different real estate companies and realtors. Are they all the same? What puts you guys?
So listen, the programs are very similar, if not the same. I think I can only speak for my office and for Advisors Mortgage Group as a whole, because that's the company I know.
On Hooper Avenue, Tom's River.
1416 Hooper Avenue. It all depends on, to me, how you structure a loan. So how many times have you got a client in the past, before you and I met, you refer them to someone and their credit score wasn't good, or this, that, and the other, and it's, oh, well, you just can't buy a house now. There's a lot of that out there. I have someone right now, was actually referred to me by someone in this office. They couldn't buy 5 months ago. Well, they're going to be able to buy now. I mean, you take the time, you tell them what to do. Now, not everyone's going to listen to me.
Put them on a plan.
You have to have a plan.
There you go. That's the difference. Go ahead.
You know, I personally don't care. A lot of people want to make the money now, and I get that. We're all in business to make money, right? At the end of the day, I make a joke all the time. The teen advisor's mortgage is not a cross. We're here to make money. Yeah. So, like, my thing is, you have to be able to sit with a client, make them feel comfortable, understand that just because they can't do something now, they're not worthless or useless. Put them on a plan. And also, there's a lot of loans right now that are just hard to do. The knowledge of the programs and structuring and knowing how to maneuver everything, the service aspect as a whole. I think service, and I'm sure you find the same way with you, separates us astronomically.
Some of the stuff that I do for my sellers and my buyers, like so many agents, well, why are you doing that?
Why go that extra mile?
Because he's going to tell the next guy, listen, I'm not giving my secrets out.
No, but there's an old adage, right? Yeah. If you do good by someone, they tell 5 people. If you do bad, they tell 500. That's the way it is. People like to talk about how bad you do, not how great you do. And you always get a referral for how great you do.
You hear a lot of stuff because, I don't usually say this, but man, this guy was good.
Well, there you go.
Yeah. And that's what I want to hear.
And then if you were bad, they want to tell everybody. And so, you have to limit listen, we're all going to make a mistake. We're all going to be out there, and maybe we didn't see the matrix on a certain file, but, we're really good at mitigating that and making sure that our loans get to the closing table.
But I like the whole thing about making a plan, not making them feel useless.
No, you can't make people feel useless.
I've been nurturing, some of my listings, I've nurtured the guy out in Jackson over a year. I nurtured this guy, and then finally he called me. Let's pull the trigger.
Yeah.
I was like, wow. Okay.
My partner Matt had a woman. I think she was up north in Lodi. 2.5 years before she was able to do something. Foreclosures and this, and we put her on a plan. Talked to her every quarter, and she's under contract up north.
I like hearing stuff.
It's a success story, really is.
Yeah, I love hearing it.
She got divorced she got divorced and just put her in a bad way, and she was in bad shape for a while. Her credit score was in the low 500s.
Well, that's the next thing we're going to talk about is credit.
Yeah,
the credit is the key.
I try to educate everybody.
There's easy ways to bring points up.
Oh, 100%. There's little tricks of the trade, paying off some debt. Even if you have a good pay history, even just calling your credit cards and get your limits raised. Believe it or not, you're not going to use it. That automatically brings you into that sweet spot. The goal is to never really use more than 30% of what you're allowed to charge. That's the golden rule. So if you're allowed to charge, $1,000 on a card, don't really put more than $300 on it. You pay it down, or and then you can go back up, but you don't want to really be more than 30%.
Yeah, because I've had clients say, well, my credit score is, 580 or whatever it is, and I said, well, no, there's ways that you could bring that up immediately, and then there's a plan that for a year.
Listen,
6 months.
we have someone.
Give them your number.
We have programs in place. We have someone we just raised 65 points in 7 days.
That's incredible.
And now they went from not being able to buy to being able to buy.
Yeah, that's key.
That right
7
there.
days
And it's
not buying to being able to buy.
And it's pretty simple, but a lot of people just see the score and say you can't do anything right now.
Yeah,
and that's just, and hence goes back to what separates us, right?
Service.
So it's all about service.
Yep. All right, so let's talk a little bit about the lawsuit.
Yeah.
We got the real estate business is changing as we are speaking here right now. Listen, it's just going to be a different way of routing things.
Yeah,
I
100%.
think. I think yes, it's going to be different. I don't think everybody's going to do the same, but in history, they're showing what this happened back on the West Coast 2 years ago, and I believe the numbers around 60% or 70%.
Yeah,
are still giving commissions out.
Okay, if you ask my opinion, we all know about anyone who doesn't know about the lawsuit. Sellers do not have to give out a buy side commission.
Exactly.
That I think pretty much, and I'm not an attorney, but pretty much, they're saying, over the course of analyzing years of files, they're saying that sellers weren't given the choice. I think that's really been the big kind of bone here. I think what's going to happen, again, my 2 cents from just being doing this a long time. I think in the like really hot towns, you're going to see people get away with not giving out, and people, the expense, and then, But I also do think in me and Matt, my partner and my business partner, like to call it, the great zone where people that $300,000 to $500,000 home price, which everyone wants to be in, pretty much.
Yep.
I think if people don't give out a buy-side commission, again, this is my personal opinion, I think it's going to yield less offers and less showings. And then at the end of the day, I think people are stepping over $1 to pick up a penny.
That's the way I look at it.
Because I think
if I can get you more money for your house,
that commission that you paid out, the commission that you paid out, I think is like an investment now. Investment to possibly make more. Now, we can't guarantee it because that would be, no one can guarantee anything. But going back to like you said, what we think, 5, 6, maybe now it's a little, oh my end, it's a little longer now. Oh man, it was probably 2009, 10. The Dodd-Frank rule came into mortgages where we had to get paid. Commissions totally different. And I'm telling you, we lost like 25% of loan originators out there because they said, this is crazy. How are we going to do this? And, now we just look at it like it is what it is.
Right.
It took a year, but I mean, at the end of the day, it's just, I think it all depends on how you educate your clients, how well your company educates you, which we know that's fantastic.
And plus, even here at Crossroads, we have brochures now, like, explaining it to them, the pros and the cons. Listen, that's where now you really have to have your conversation with your buyer.
100%.
Listen, if we don't, what are we going to do? I don't work for free. Nobody works for free.
Listen, I always tell people that. When you go to work, they say, well, I want you to do it at this. Well, if we do it here, we're not making any money. So at the end of the day, if you went to work for 2 weeks and you got your paycheck and it was zero, you wouldn't be happy.
No, I wouldn't
people forget about that, right? So, it is a service, and I love helping, especially love helping first-time home buyers. I love to see how excited they are. But at the end of the day, this is my job. Right,
what are the mortgage company say? What are the mortgage companies doing? Because obviously they know the situation, and are there ways?
Yeah.
So what you talk to your mortgage people.
Yeah, we're trying to educate our buyers on is that whole what separates us, the structuring.
Right.
Sellers concessions, where you could buy the house for a little more and finance the closing cost. Now that commission could possibly come into the whole closing cost factor. Right. And now you're moving money around, and they're actually spending the same amount of money. You're just moving it and shifting it in different places.
That's what I think in the long game here is what's going to happen.
I think that, after this lawsuit passes, I could be wrong, but Fannie Mae, Freddie Mac, FHA, VA are not going to really make any changes to their internal guidelines until this actually is passed and probably out for 6 months.
Nobody even really knows the end game yet. That's
nobody does.
As far
what
as
is it? August
17th?
Right now, August 17th is the
next.
So we may get a stay of execution. So when the that's what we call it. When the mortgage rules changed, I think there was 2 or 3 of delays. They eventually. But listen, we all know this is coming. It's not going away. They're not just going to say, "Oh, just." Don't worry about it, because now too much has come out, so they can't just say now it's gonna be gone. So I think we are gonna get a little bit of more guidance and more education, and then we will eventually we're all gonna be working together.
But listen, it is what it is, and I'm fine with it.
I think a lot of people, once they just sit down and realize everyone's gonna be operating the same way. Yeah. It's not like Remax or Keller is gonna operate different than It's gonna be industry standard.
I think though in the beginning it is gonna be a race to the bottom.
I do too.
It's not long before you're gonna see I'll buy you a house for $199,
which is an absolute joke.
Yeah.
But that's gonna be very short lived.
Very short lived. Yeah.
If that lasts a quarter, I'd be surprised.
Yeah.
But I mean. Yeah.
What are you going to get service-wise?
Well, there you go. I always make a joke, the old school sales tactics, right? Would you go to a discount heart surgeon? No, you want to go to the best heart surgeon in the world.
Of course.
You don't care how much it costs. You do get what you pay for. Yeah. I mean, if I've never been a race to the bottom guy.
Me either.
And listen, I'm not saying we want to, but everyone has to earn a little bit of money to make a living. And again, no greed. Once greed comes into play, it's over.
Yeah.
So I think, to your point, pairing up with a team, You know what I mean? Us,
course.
you guys, and really having
Consumer
conversations.
choice. You know,
The title
company
yeah.
is super important too.
Yep.
And we'll have Steve in here
Yeah.
one of these days.
Yeah, I mean, it's
But yeah, so if you can get all of us, together, like advisors, Consumers Choice, Crossroads, it's a great team.
I mean, with the insurance arm that you guys have.
Yep.
And Seth is really great at what he
so,
does
yeah,
from
Seth,
from
World
World
I'm
Insurance.
sorry, Seth. Yeah, Seth Insurance. So you have all bases covered, but it's good because 10 o'clock at night,
We're texting
Nick,
each
got an
other,
issue,
yeah.
man, and I know he's going to answer the phone or call me right back.
And that's the thing. So
Same the other way around.
in a hectic market where every second counts. I mean, you guys know this.
Every second, yeah.
Everyone. So it could be the difference of you guys getting the house or not getting the house.
Yeah.
With the other 10 offers, So I think everyone has the right plan in place. It's just how to structure everything and get with it.
Yeah.
Yeah.
So I'm also sitting here with a hockey player. You still playing hockey?
Yeah, still playing
Wow.
since I'm 5.
Is it on like
Yeah,
right
we
now?
play all year.
All year round?
Yeah, maybe 1 month off during the year. And in that 1 month we're probably skating anyway.
I can't skate.
Tonight we have a game, as a matter of fact.
Oh, do you?
Yeah.
I got rehearsals.
So
Listen, man, this was very, very informative. I really learned a lot myself. And
I'll be excited for take 4.
Yeah, no, we're gonna do we're gonna actually have Nick come in here more often than not.
That'll
At
be
least
great.
Maybe a monthly show.
Yeah.
We've been talking about just to keep you updated on what's going on, and you can get this on YouTube, obviously, because you're watching it.
And 1 month we're going to put Jamie in the hot seat. I'm going to be asking the questions.
All right, so
Everything that is real estate.
I want to thank everybody at Crossroads Realty, Chris DePiro, Mark Casas, thank you so much. Amanda Thompson, thank you so much. Thank you so much.
Thank you, James. I appreciate it.
Donna, another
Donna
tremendous
behind the
job
glass.
behind the counter over here, the console. We'll be seeing you soon. Soon. What the hell is that? We'll be seeing you soon. And everybody be safe and have a great 4th of July.
Happy 4th, everybody. Thanks, James.
Thank you.